Hello friends, welcome to Nirmal. I am Piyush Jain and today we are taking you to an economic conversation. Monsoons are right around the corner. They have started progressing from Kerala. Everybody in the country is now actually waiting for some relief from monsoon. But from monsoon, we also actually go towards agriculture, sowing. What actually this time the crop growth or cropping volumes, crop yields, how sort of kharif output is going to look like. A lot of questions actually get linked to agriculture when we talk about the monsoon. We also actually are talking about how the sort of Rabi season has progressed as the crops actually are starting to come by into the markets. So perhaps all of those calculations, they actually lead to talks around inflation, what's happening there, what's actually happening on the GDP growth expectations. And a lot of that conversation actually gets linked to the markets then. So let's try and understand how the economy is looking like. And for getting answers to all those questions, let me welcome our well-known expert, Mr. Madan Sabnavis, Chief Economist from Bank of Baroda. Madan sir,
Thanks a
welcome to
lot,
the show.
Piyush. Thanks a lot, Piyush, for having me on the show.
Always a pleasure talking to you, sir. Let's start with a conversation around monsoon. This time of the year, we always actually start seeing with heavy interest. Would this be the same time like last year? Will the monsoons be the same? There has been some delay due to cyclones, but overall, what do you make out of IMD forecast? Is it going to look like another good Kharif season?
See, actually, a couple of things out here, Piyush. See, one is to say whether we'll have a normal monsoon or not. Now, that would be a matter of time before we get to know whether we'll be at this level of 96% of long-term average, because the IMD says it'll be normal, whereas SkyMet is saying it's going to be slightly lower. But what we've really noticed is that in the last few years, that there's been a tendency for the monsoon to arrive later. So I think what's happening today is not really surprising. Even in the past, we have seen that the monsoon rarely comes in the beginning of June. It's always sometime towards the end of June that the monsoon really comes in a meaningful manner in the country. But what's really important is how it really progresses across different geographies and the different areas where a major kharif crops are grown. So I think that is some matter of concern because today we are talking of the development of the El Nino. The El Nino does have a tendency to bring about drought-like conditions. And given the fact that the interiors of India are still rain-fed, they do not really have access to adequate irrigation facilities like the northern states, which do get relief from the Ganges. We don't have such kind of facilities when you're talking of crops which are dependent on the river waters of, say, the Krishna or the Godavari. Wait. So I think that's why there is a bit of concern about whether there could be some shortfalls in terms of production of certain crops. And those crops would, of course, be in the area of oilseeds, pulses, and probably to a certain extent also cotton. So I think one will have to wait and watch. But right now, given the fact that we are following the trend of the past, there is reason for one to be concerned about whether or not things are going to be normal for this particular season.
Right. And having said that, a lot of Rabi crops have been coming over the last few weeks into the markets. What's your overall outlook looking like, or what's your overall assessment at present of the food inflation?
See, if we're looking at the Rabi crops, I think that is pertains more to what will get accounted for in 22-23. That's when you're talking of the wheat crop or even the chana crop or the mustard crop. So I think that has had a certain positive impact in terms of prices, though I think wheat prices continue to be elevated because we've seen right from last year where production was lower. This year, of course, the production numbers are supposed to be slightly higher than what was achieved in the year of 2022. But I think given the fact that the FCI has not been able to procure what it was targeting, I think that itself has set in motion the case of prices moving up in the market. And what we are seeing is that there is a bit of reluctance on the part of the farmers to sell wheat to the FCI because they're getting higher prices in the market. So I think cereal inflation is something which has been a bit worrisome because it's ruling at over 10%. In fact, pulses is over 6%. And that is why I think there's some kind of a severing of the link between production and inflation. So even the production numbers have been good. There is case for one to believe that the prices have been increasing, and that's one of the reasons I think why the government has also increased the MSPs. MSPs, of course, do add to inflation, but they want to make sure that the procurement of rice is very much on target when it comes to the current season of 23.
Right. And having said that, how does sort of global inflation look into you? Because if we take a look at crude prices, cool off has been seen, gas prices, some moderation has been seen. Overall, again, if you compare almost 2-3 quarters back, we have seen some fallback in the edible oil prices also. But broadly, the global inflation, does that still remain elevated?
The global inflation definitely has come off, and I think prices will remain fairly benign in the current financial year. So I think any kind of a shock which could come from the external world would probably be restricted more to something like crude oil. And right now, the crude oil economics looks like that we will be in this region of around 80, 85. That's the worst case scenario. Otherwise, things will be fairly under control. So the fears of imported inflation rising in this particular year, I think they can be kept aside. It will be more a case of domestic factors which will be driving prices, and in particular, we're looking in terms of food crops.
Right, sir. So at this point of time, if we actually want to assess from the GDP growth perspective, because you would be actually forecasting sort of almost 4 quarters and then following up with the data. Uh, from where we are right now, and the next time where again we review in August, the right now where we are, uh, is GDP growth looking quite robust? Like, how comfortable are you with your forecast so far?
So actually, even though the growth numbers are going to be lower than that of last year, so instead of 7.2, which we had last year, we're looking at a range of 6 to 6.5. Now, when I say a range of 6 to 6.5, in case the monsoon turns out to be normal, we could be closer to the 6.5 region. In case we have disturbances in specific crops, as I mentioned, the crops of worry would be pulses and oilseeds, followed by cotton, then we could be moving towards the 6% range. So while we are less than 7.2%, I would say the growth rate is probably just about stable. So it's not something to take too much of comfort, but given the fact that there is a global slowdown, this particular number numerically looks good. But I think there are lots of fundamental issues in the economy that still need to be addressed. And I think the government is trying its best on its part, but I think a lot more needs to be shown by the private sector for this growth number to really get elevated and move towards a higher trajectory of maybe say 7 to 8%, which I think is still some distance away.
Right. And sir, also I want to ask you, like, if you take a look at the PMI numbers, those actually are showing strong expansion both in manufacturing, service. When I take a look at the GST numbers, yes, there is a bit of volatility, but still, again, the last one we clocked again more than 1.5 lakh crores. We are seeing toll collections moving at a steady pace. UPI volume numbers are sort of showing steady increase. Uh, what all of this actually is telling you, like, if there is a moderation in the growth, what do you expect as a trend from here?
No, actually, Piyush, what I've seen is that even if you look at last year, I think all these indicators which you mentioned are the ones which were very robust. And did give a sense that there was a bit of buoyancy in the economy. But I think a large part of that has been contributed by high inflation. So even when you're looking at things like GST collections, I think the GST collections are pushed up because of inflation. If you look at real consumption, it was almost half the growth rate of what we were seeing in nominal terms. Similarly, when you're looking at PMIs, honestly, I don't really believe much of a fan of PMIs because they've been very misleading. Because when you compare them exposed with what happens to IIP growth, I think we don't get a clear relationship out there. And of course, it's based on the method. It's based on the sample which is used. You don't have the public sector. It's a month-on-month comparison. Whereas when we normally talk of GDP growth or any other economic indicator, it's Y on Y. That's year on year. So while there are good, there are. I mean, it's good to have these indicators, but they have tended to be a bit misleading. So I think we'll have to wait and see as to how agriculture behaves, how consumption, whether or not consumption revives, and that kind of thing we'll get to know only in the second half of the year. And we should remember that in the last year, on account of the pent-up demand situation, we saw both manufacturing as well as services doing relatively better. But again, manufacturing, we will have to again qualify it, because if you look at the PMIs were very good, but finally, if you look at what was industrial growth, or rather the manufacturing sector growth, by the GDP numbers, it was 1.6%. So it's quite a disaster. Whereas we were saying all through the year that the PMIs are very good. So therefore, we should be a bit guarded about the PMIs. We'll have to wait and see whether, with the pent-up demand behind us, and whether rural demand is going to revive, that will be dependent on the monsoons. So I think the second half is going to hold a clue to how the GDP numbers are going to finally fare, and whether consumption is something which is going to be on the right track.
Very interesting answer, sir. And actually, I was trying to link that to consumption, because of late we have seen over the last 2 weeks there has been a lot of buying into consumption stocks, and we actually are seeing staples. There is also actually buying in other categories of consumption, but it's a very consensus sort of opinion that we are seeing some strong sort of expectations there. Um, Linking to consumption to what you said, and then if I go into the rural sector and the urban sector, between urban consumption, rural consumption, what is your assessment right now of the underlying demand?
So again, based on the commentaries made by a large number of the companies in this particular space for the fourth quarter, it does look like that things are probably going to improve in the current financial year. But I don't know how much of it is just based on optimism, and how much of it is based on the fact that more jobs have been created, income has been generated, because most of these companies have actually mentioned that high inflation has come in the way of consumption, real consumption. So I think higher prices is something which has deterred demand both on the rural as well as urban side. And the urban side has done better primarily on account of premiumization, where the higher value products are the ones which sold. But if we're talking of the common man, whether the consumption has been as buoyant as that at the higher income levels, the answer is probably no. So even now, I think at this point of time, I think if you're an FMCG company or a consumer durables company, I think it'll be hard for anybody to say that we're not going to do well in the current year. So you start off with optimism, saying that things are going to do well, and then what you mentioned, stock prices react to that, and they appear to be buoyant. But at the end of the day, I think we need to create more jobs, create more income, purchasing power, have inflation under control so that people are in a position to spend. So again, it goes back to the same thing. When you're talking of rural demand, admittedly, 50% of rural demand, I believe it's less than that now. There are no authentic numbers as to how much of it comes from agriculture. But there are some private estimates which say it's come down to around 40-42%. So if rural demand is something which is on target, then I have a feeling that there could be some kind of a revival which we see from this side. Otherwise, I think it's going to be more or less a case of stable consumption, which is going to be the story on this particular end, which also means that investment is not going to be too buoyant this year. That's private sector investment. And the heavy lifting has to be done once again by the government.
Interesting thoughts. And also of late, we have seen, and the numbers actually have been almost, I would say, boring, or I would say a very, very similar set of numbers. Again, if I combine both the statements here, over the last almost couple of months, we have been consistently seeing credit growth in the banking system around 15% plus minus 1%. Uh, what's your sort of assessment in terms of the short-term markets and also the credit growth?
See, we're looking at credit growth. I think what's really happened is that we're not seeing so much of an uptake in terms of the manufacturing sector that is within the corporate space. Services are, of course, credit growth has been buoyant, but if you look at it, it's driven more by the NBFC sector, which uses it for on-lending purposes. Otherwise, it's been a retail story for quite some time. So, and the reason goes is it's not just a case of saying that banks are not lending to manufacturing, it's also a case of overall demand. Because if you see the overall investment rate has been fairly stagnant for the last few years. So unless I think investment starts picking up, only then will we see more demand for credit from the industry scene. So and that to my mind is still a bit distance away. When I mentioned that the government is doing the heavy lifting, that will be in terms of its capex and the investment which is resulting from that. The private sector one is going to be a bit more choosy. So I think the growth in credit will be lower than last year. We're looking at a number of maybe 12 to 14% rather than the
Okay.
15% which we saw last year. Still to be concentrated more in the retail segment, maybe a little bit of agriculture, because that's in a priority sector lending, and probably the services sector. Not really in the manufacturing sector. There could be a bit of some sectors like, say, steel or cement could be showing some buoyancy linked again to what the government is doing. But definitely it's not going to be broad-based when you're talking of growth to industry.
Right. I think our viewers would remember that I think almost 2 months back, I think there was a conversation on our show where it was being discussed that perhaps we could be seeing some moderation, and what you are saying almost like looks like that the expectation of our viewers on the credit growth in terms of the banking stocks perhaps I think is going to be tapered down. I think so. That is something interesting takeaway we can take away from here. From there, interest rates have been on the rise, and we actually have been seeing that impact across the board. And of late, I actually read interesting comments coming from you, which has been echoed over the last many years from many experts also on the credit rating of India. You actually seem to believe that India's credit rating actually should be going up. In your opinion, what is stopping that right now? And perhaps when could that time come when actually we really move up one notch from here?
See, let me put it this way. I don't expect our credit rating to ever change because I think the way in which the rating agencies behave, I think they seem to be having a bias against emerging markets. So if you look at it, notwithstanding the kind of performance which economies put up, I'm not just saying India, but since we're talking of India, if we look at the external situation has been very strong. I think everybody acknowledges, not just Indians who are saying that we're doing very well, but I think even the multilateral agencies say that India is the fastest growing economy. There have been lots of reforms. We've seen lots of changes which have taken place. But yet, if you keep hopping on just the debt indicators, which I agree are on the higher side, but the fact remains that when you're in an emerging market, the responsibilities of the government are quite different from those whether in case you're in developed countries. So there's a lot of expenditure which is required, which has to go towards the poor, which probably countries like the United States don't require. And just harping on one particular factor and keeping the rating where it is, I don't think it's a fair thing. It's a fair assessment. Of course, the
But
other way around.
but sir, jumping with one point on debt, we are much better than many of the European countries also, right?
Yeah, we're better than European countries, in fact. But I think the justification normally given is that you say that since America, for example, there's the anchor currency, so therefore they can run deficits over 100%. Same thing holds for
Yeah.
Japan. The same thing holds for UK. But they say a country like India should not be doing such thing. But once you remember that, look, India, all our debt is denoted in rupees, and even in the most absurdly theoretical stage, there can never be a default by the government of India. You can always print more currency. And given
Yeah.
the fact that all that we have macroeconomic stability in any way we define, so I think it's not a right way in which we're looking at India's sovereign rating. But then I think this is the kind of mindsets which are there, and we have to live with it. So in the normal circumstances, I would say we don't have to really bother about what these agencies do. But the sad part is that number of Indian companies are raising funds in the euro markets, which means that the sovereign rating becomes a kind of a ceiling for us. So a company cannot be
Very
better than the
important. Yeah.
company. Therefore, you're stuck at this level of triple B minus. So that's why it matters. And I think it's going to take a lot to change the mindset. I think the maximum change I've seen in my working career is that just the outlook change is probably too positive. Nothing more than that. We always seem to be at the sub investment, just about at the investment. Sorry, at the investment grading level. And let's look at it the other way, saying that people who are actually investing money in India, like your FDI, FPI, they have been coming in large quantities. So people who are actually putting money on the table think India is a very attractive proposition. However, the rating agencies don't still think, and they keep harping on this issue of debt. And I don't think these debt ratios can ever change because as we keep restricting our fiscal deficit, even to say 3% as we come down, the debt levels are going to keep increasing, which means that my debt ratios will always be unfavorable.
Absolutely, and this conversation always comes up whenever we actually talk to institutions, the overseas institutions, pension funds, sovereign funds. They really look at sort of these things from a particular project funding with very close eyes, but very closely, in fact. But yeah, the investments actually into the markets actually they are coming thick and fast. But with that, Manasa, we'll leave this conversation here, and perhaps I think we'd like to review it again in August. Come back, assess the monsoon with you, understand perhaps how the economic growth is looking like, how the markets actually are digesting it. But for now, start of the monsoon, early data actually which is coming, and we still actually are a couple of weeks away from really assess how the rainfall is looking like. Sir, thanks a lot for coming on the show.
Thanks.
And dear viewers, with that, it's a wrap on the show.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.